I just want to talk about gold on the weekly time frame for those traders who didn't quite make it on the daily. We still have an opportunity to get long as per our seasonal bias for gold. Historically, it does essentially go up this time of year throughout late December, January and February. Plus, we've got technical confirmations for this one as well. And we've got a Fibonacci cluster. If we take the Fibonacci from the swing low, or the low should I say, in November 2015, we can see that we're currently at the 382 Fibonacci retracement. We are also at, we take the Fibonacci from the higher low seen essentially this time last year, actually 2016. We can see that last week's bullish pin bar reversal rejected the 50% Fibonacci retracement, and if we take the Fibonacci retracement from the low, the second high low in July earlier this year, we can see that we actually have a 786. So we've got a Fibonacci cluster, we've got the bullish pin bar reversal rejecting not just the 786 but also the 50% and the 382 as well. Furthermore, we have the completion of an ABCD pattern here, and let me just do the Fibonacci extension from point B to A, and we've got the 1.618 extension. Okay, we can see that ABCD pattern a little bit more acutely on the daily time frame. Let me just go down, but it is a ABCD completion. There we go. We've got points A, B, C, and D, the extension at the 1.618. Like I said to you before, I'd far rather see the completion of this bigger ABCD pattern here, point A, B, C, and have the projection somewhere down here. But we had this A, B, C, D completion within the ABCD. So it's like an ABCD pattern within inside a bigger ABCD pattern completing. Now, given that we've made several higher lows previous to now, this is the third 1, 2, 3 high low, it would seem that now would be a good point to potentially anticipate further upside gain for gold, given that historically December, January and February are pretty bullish for the precious metals. Okay, so bullish pin bar reversal on the weekly time frame is quite a stable entry. It's a safe entry. We're already in on the daily, but for those people who are not in gold already and like the look of this potential setup, then trading the break of the high of last week could be potentially a very good idea. Okay, so have an entry above last week's high, stop loss below last week's low. What is interesting as well is the fact we've got bullish reversal divergence on the stochastic setting 833, where we've got potential higher low, whereas price made a lower low here. And if we traded it in the form of the standard entry, i.e. entry above the high, stop loss below the low, we could simply, if as and when we're triggered into the trade, we could simply scale out at a 1-to-1, anticipate a potential profit target. This previous swing high could be one, as we've seen price kind of extend to the 1.618. Historically, we could anticipate the same again. So if we, for example, take our Fibonacci extension from this point to this point, we can see that the 1.618 all the way up here gives us a very good profit potential. Okay, so if we just do that, we just kind of like have a look to see how much we can make from this. We've got entry above the half last week, stop loss below the low. There we have it. It's a potential 7.86 to 1 reward to risk trade, risking 1%. So potentially a 15-16% gain if you're risking 2%. That is if price does go and hit target. It's very seldom that price does cleanly go all the way unabated to hit targets. So we've got our take profit zones along the way, just to lock in profit, because obviously the market doesn't do exactly what we want it to do. So our first target is a 1-to-1. We're going to scale out at that point, and then the second target will be this previous swing high here. Okay, so that is gold on the weekly time frame. Happy trading, folks.